Hi, and welcome back to another podcast with Mr. Hagan. And on this podcast, we're going to talk about the impact of a sales tax. What happens when the government puts a sales tax on a product, and to think about the impact of a sales tax, we're going to think about what is called the tax incidence. And the tax incidence is the idea of who pays the tax. Is it the consumer that pays the tax, or the producer who pays the tax? And this might look like it's pretty straightforward when you first start to think about it, but it turns out it's not. It's much more complicated than it first looks. So let's just imagine maybe that somebody wants to go buy a lawnmower. Somebody wants to go buy a lawnmower, and let's say that lawnmower cost $250, and so I'm recording this in Pennsylvania, and our current sales tax in Pennsylvania at the time that I'm creating this video is 6%. So you would look at this and you would say, okay, you go to some store to buy a lawnmower, and maybe you go to Walmart to buy a lawnmower, and Walmart's price for the lawnmower is $250, and then they have to charge the sales tax on top of it. So 6% of that would be a sales tax of $15.06 if my calculations are correct. And so then Walmart is going to charge you a final price of $265.06. And so you might say, well, obviously the consumer is going to pay this tax. Walmart is just going to charge you the tax, and you'll pay it, and then Walmart will mail that tax into the state of Pennsylvania. So somebody might say, it's obvious the consumer is going to pay the tax. It's just going to get added to the price. But it turns out that that's not quite true. And we're going to see that in this playlist. So first of all, we need to break this incidence, this idea of who pays the tax. This is our little simplistic thing, a way of thinking about it, but we need to break this down into more detail. So when we say tax incidence, there's really two parts to that idea. One part of that is what we call the statutory incidence. The statutory incidence is the person, could be the producer or consumer. Usually it's the producer, but not always. It's the person, the producer or consumer, with the legal obligation to mail the tax into the government. They have the legal obligation to mail it in. So their job is going to be to collect the tax from the consumer and then mail in the tax. They're going to mail in the tax. They're going to send it in my example, to the state of Pennsylvania. So Walmart is going to collect the tax from you, and they're going to do that on all the products that they sell. They're going to collect the tax. That is charged, and then they're going to mail it in to the state of Pennsylvania. So that's called the statutory incidence. So at least where I am in the state of Pennsylvania, it is Walmart, it is the producer, the seller of the product, that has the legal statutory incidence to make sure that the 6% sales tax is collected and that it's mailed in to the state of Pennsylvania. Okay? That's statutory incidence. Now, the actual incidence is the person who actually pays the tax, and it could be the producer or the consumer, and in most cases, it turns out that it's going to be both of them. Okay, in most cases, it's going to be both. Not always, and in this playlist, we will look at examples of when it's the consumer pays it, when the producer pays it, and when they both pay it. Usually, they both pay it, which might sound kind of surprising. So this is the person who actually pays the tax with their own money. It's kind of like asking, whose checking account did the money come out of? Whose checking account did the money come out of to pay the tax? So in my example, maybe the money came out of the consumer's checking account in order to pay the $15.06 in taxes. that came out of the consumer's checking account, and they paid it to Walmart, and then Walmart mailed the money into the state of Pennsylvania. So that was the statutory incidence. So there's the actual incidence, who actually has to pay the dollars in the tax, and then there's the statutory incidence, who then has the legal obligation to mail that money, to collect it and mail it into the state of Pennsylvania. So in most cases, the actual incidence is going to be split between the consumer and the producer. Both of them are going to be paying part of the tax. Both Walmart and the consumer will be paying part of this $15.06 tax. And then the statutory incidence, in my example, will often be on the producer, and they will have the legal obligation to mail that $15.06 into the state. So we will look at this on some future videos. We'll do some graphs on this and be able to see very clearly on the graph more clearly what I mean by statutory and actual incidence. So this is just kind of an introduction to the concept. So we have statutory and actual incidence. All right, this has been Mr. Hagan on another podcast. Thanks for joining me, and we'll see you on the next Econ podcast.